morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show. This is the show where we put you in front of where the action is in the broader markets. And as usual, there is quite a bit of action out there. Let's go ahead and take a look at what we are going to be covering here today. Per usual, we are going to take a look at the current markets. We need to make sure that you have the strength of the markets behind you. We'll take a look at where they stand now and review our outlook for the broader markets. Also, we're going to take a look at sector rotation and how you can spot candidates as we see stocks moving into newer sectors. We did get a bit in the way of sector rotation last week, so I want to go ahead and cover that and help you uncover top potential candidates within that rotation. And then also, of course, news today out of China with some nice manufacturing growth numbers. And we're seeing some of these Chinese ADR stocks pick up a bit. So we're going to be covering a number of candidates there that look compelling for those of you that are interested in playing this move into the Chinese markets. And then also uncovering turnaround stocks. A number of financial stocks truly have gotten oversold, beaten down. So hopefully we'll have time to uncover some of those that are looking a bit compelling here, given their oversold nature and the potential of them turning around. They are rallying today, so we'll get into that as well. So let's go ahead and get started. This is a view of the S&P 500 large cap index, and we are of course using StockCharts.com daily price chart. So each bar here is 1 day of price activity. So a lot marked up here, but what I did want to go ahead and point out to you as usual is the current price action relative to these key simple moving averages. This green line is your 10-day simple moving average. And then we have the red, that's your 50-day simple moving average. And this blue line is your 200-day simple moving average. The relevance here is you want to see this price above these key simple moving averages. Certainly, we don't want it back here. We had the markets breaking down. But more recently, of course, we're in a very bullish uptrend, and this shorter term simple moving average can help provide some insight as the index breaks up above it, as it did at the close last Friday. And then today, of course, we're seeing a continuation of this uptrend. So let's go ahead and take a look at some of these other indicators that I have. Up here on top is the RSI, or relative strength indicator. We can see that it is up here above this net neutral 50, so that is positive, and it's also heading north, another positive characteristic. Go ahead down below the price chart, and we have what are called stochastics. Both of these indicators are momentum indicators, and they can really help you key in on whether the markets are in an uptrend. Are they positive? So taking a look at these stochastics, we want to also pay attention to that net neutral 50. Are the stochastics above that? And indeed, they are also heading north in a positive fashion. So we can go back to other prior periods and take a look at really how powerful this can be when you're spotting downtrend reversals. So we do have the markets in good standing. One last indicator here, we have this red 50-day simple moving average poised to cross up above that 200-day simple moving average. When you have a shorter term simple moving average potentially crossing above a longer term, that's known as a golden cross, and it is viewed as a bullish indicator. It's very much a secondary indicator, but it's confirming the bullish action that we are seeing here in the markets. So let's go ahead. I talked about looking at sector rotation and how you can spot it. Now, what I've done is I do quite a bit in the way of spotting sector rotation. It's very critical to my work at MEM Investment Research. But what I want to do is show you how you can potentially spot it, but more importantly, show you the importance of staying on top of these sectors and how they're performing. So this is the initial page interface here from StockCharts.com. And I'm going to go ahead here to this sector summary. And from here, we are looking at initially the intraday, so we can see what is working today by percentage. But what I'm going to do is go ahead and take a look at the year to date. And from here, we are really going to be able to spot quite clearly where the strength is in the broader markets. For those of you that follow the markets closely, you may know that the markets did turn positive that first week in January. So these are real numbers as far as since the markets did turn positive and reverse that bear market. So what I did want to point out from here is let's take a look, for instance, at the materials sector fund, and we can see year to date up about almost 12%. But from here, what I am going to go ahead and do is take a look at the 1 week performance. And we can see that the materials are up here in the forefront, up 4% over the last week. Now, this is something that, again, if you get into the practice of paying attention to this performance, not only on a daily, on a weekly, it really doesn't take a lot of time, but you will be able to spot that of that 12% year-to-date performance in materials, 4% of it is just over the last week alone. In other words, we're seeing money flows into this material sector. Now, as far as drilling down from there into some of these individual groupings and stocks, let's take a look at the non-ferrous metals. Oftentimes, your best performer is best performer for sound reasons, and we're going to go ahead and drill down by clicking on that name. We're looking at these the stocks within that sub-industry grouping. And then from here, I like to sort it by scooter. This is the StockCharts technical rating. And the higher the number, the better. And so what we can do is just drill down and hover over some of these stocks. And let's go ahead and take a look at SCCO. I like to look at some of these larger cap. These are going to be more liquid. And they do, for instance, this one has a 67, so certainly a good scooter rating. And what we can see here, we're looking at a daily price chart, and we can see that this particular stock is in the process of reversing this downtrend. I talked about paying attention to these key simple moving averages. So as the stock's price progresses above these simple moving averages, we are in the beginning phases of this downtrend reversal. But more recently, the stock has finally broken up above this 200-day simple moving average. In other words, the upside resistance is not there. The stock is freer to advance. We can see that this RSI is up above this 50, trending northward. And then down below, we have a MACD. That's a moving average convergence, divergence, and it is another wonderful way. This net neutral here is 0. We want to pay attention to the black line crossing up through the red and then also heading above this 0 in a positive fashion. So that is one way. Let's go ahead back to that initial phase and page, and we can take a look at another area where we are seeing rotation into a particular group. So I'm going to go ahead and practice that same exercise as far as the sector performance. I want to see year to date. And what we can see here is industrial is very much up in the forefront, up 19%. So they have really come on quite strongly here, a number of different areas. But from here, what I want to do is take a look at the 1 month performance within all of these various sectors. And we can see that the industrials are lagging. They're down here only up less than 0.5% over the last 4 weeks. Now, again, this is something, if you follow it closely, you would have spotted the fact that industrials did, in fact, fall out of favor. So let's take a look at what areas, because a lot of you may think that it was a Boeing that may have caused the drop, but in fact, a lot of areas within the industrials were not doing well for the month of March. We can see airlines, trucking, aerospace, and so forth, all down here in this lower quartile as far as performance. Now, I'm going to take you to that 1 week performance, and actually, I want to go back to this sector, and we want to see the 1 week and take a look. Now, I talked about the last 4 weeks, industrials were down, but over the last week, they're up 4.3%. Very clear-cut sector rotation into the industrial sector. Let's go ahead and drill down. And now we want to know where within these industrials are money flows going into. So again, this is a 1 week view. Now we're looking at the sub industry groupings within the industrials, and take a look at this. Airlines, they were down over the last 4 weeks, but over the last 1 week, up almost 7%. Truckers, they were down at the bottom, now up at the forefront. So these are the areas where we are seeing significant money flows into. Now, let's drill down within the subgrouping so that you can then uncover candidates that could potentially just be beginning their sector rotation. So now we're looking at airline stocks. I'm going to go ahead and sort this by that StockCharts technical rating. And what I want to do from here is go ahead and hover over that ticker symbol. And what I'm looking for are candidates that are potentially turning down from these oversold positions. And we can see a couple of candidates here. We can go ahead and start with Spirit Airlines. SAVE is the ticker symbol. And when again, we are going to be reviewing the same as far as characteristics and as far as the technical overlays. And what I want to point out to you here is that we are too early. SAVE is not constructive looking. It is attempting to turn. Your RSI is not quite positive yet. Let's go down here, take a look at that MACD. We're just barely getting that black line up through the red, but we're not up above this net neutral yet. So while interesting, not there yet for this particular stock. I'm going to go ahead back to that list. I'll go back one more, and we can take a look at another potential candidate. This is ALGT. And this particular stock, I'm going to expand this a bit for you. So what we can see here is this stock is a bit more constructive looking. We can see that the RSI, now granted it is up already quite a bit, but we can see the RSI trending up above that 50 up north. And the MACD is just now having that crossover with the black line up through the red, poised to turn up above this net neutral. And then also, more importantly, the stock's price has advanced above these key simple moving averages. So from here, what you would want to do is go ahead and take a look at the fundamentals. Is there a reason that Allegiant is potentially a bit more positive and constructive looking than some of the other names? Now, there is one other thing that I did want to, one other area within StockCharts.com, within this sector work, that I did want to go ahead and review with you so that you can not only look at these turnaround candidates, but let's go ahead back to the S&P sectors. We're going to go ahead to the year-to-date performance and take a look at technology, up 20.5% year to date, super strong. And again, there are very sound reasons. The technology sector, we are just ending Q4, the earnings season, and technology stocks had the largest number of stocks that came in with earnings that were very strong and also well above estimates. So this is a very high growth area. So we certainly, in addition to looking at sector rotation, you want to key in on where that strength is. While many of you, perhaps you're just entering the markets or you're looking for new potential candidates, this industry group may have gone up 20%, but there's still a lot more in the way of upside. The growth prospects within technology are very, very sound. So let's go ahead and drill down, uncover how you can get in front of some of these faster moving, really technically sound stocks. I'm starting out here with the telecom, communications. And again, we're going to go ahead and sort it by this StockCharts technical rating. And what we want to do is go ahead and drill down. Now, this is going to be a matter of your taste as far as, are you comfortable trafficking in some of these smaller cap stocks? Again, I do tend to like larger. This is a stock that I'm quite familiar with. ANET. So we can go ahead and pull this particular stock up. Now, this gap up here was on earnings, and we can see the stock is continuing to advance. This is a little bit long in the tooth. When we look at this RSI up here at the top, as it gets up above this 70, it gets into an area that is called overbought. And as you can see, it can remain in that overbought position for quite some time, but it is with an eye toward a potential pullback. But it is in a very, very sound, very strong uptrend. Let's go ahead and take a look at a weekly price chart to get a bit more in the way of perspective, but also to get a longer term outlook, so we can see that this stock is poised to break out of a very lengthy base. And in fact, it did break out of that base. And we can also see that on the weekly, that RSI is positive. And then your MACD, you had that positive crossover also trending upward. And I have one other area within technology that we can go ahead and take a look at. Again, using that sector summary, we can go back down to the sectors. And then from here, take a look at technology and take a look at some of these other sub-industry groupings that have been really quite strong. Software certainly has been a very top sub-industry grouping within technology. Again, we can just drill down and take a look. We may want to drill down a bit further below these really high scooter ratings, because a lot of these stocks are really have had these significant advances. Take a look at this thumbnail shot of Cadence, very, very big mover. So as we drill down, we are looking for potential candidates that are not so out up and away. So this is a good example. This is ServiceNow. NOW is the ticker symbol. We can see this gap up here on earnings, and the stock really has just been marking time, one to potentially put on your radar screen with an eye toward a potential another leg up. It may take earnings, but again, this is how you can get in front of these stronger stocks. We're going to take a little bit of a break here because it's a very important week here at StockCharts.com as the 20th anniversary is occurring.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy. Tune in to Market Watchers Live at 12 p.m. Eastern Standard Time during the week of April 1st to April 5th to help us celebrate.
And we are back. There is one area that I did not want to forget to do this week, and that is taking a look at where the strength is in the broader markets. And what we are looking at here is what is called candle glance. And this is a wonderful tool because it provides you with a 2-month snapshot of the various indices, and you can see it's already pre-populated with different indexes and very helpful, the US dollar, treasury yield, and so forth. And what I'm doing down here is I'm populating sub-industry sector groupings so we can very quickly get a sense of where the strength is in the broader markets. So what I'm doing down below is populating the various sector subgroupings so that we can key in on precisely where that strength is. So what I've done is input that, and then from there, I'm going to go ahead and add this RSI indicator. This is, of course, that relative strength indicator. I want to see where the strength is. I'm going to sort it by descending. So the stronger groupings will be up here on the left. And we can see, very interestingly, that consumer staples of those sub-industry groupings is very, very strong. And this is another area with that sector rotation. If you stay on top of that, you will have seen that over the last 2 weeks, some of these down and out staple stocks are coming into favor. And then, of course, here we have technology. We talked about the strength within these tech companies, followed by that rotation into industrial stocks, picking up nice momentum today, up almost 2%, and so on until we get down to these lower quartile areas as the VIX is dropping, which is a good news, and these more defensive gold areas are also dropping. But let's take a look at these financials. I mentioned that we will go ahead and take a look at that in a bit. But before we do that, I did want to go ahead and cover some of these Chinese ADR stocks. As some of you may know, China did release some manufacturing data today, and it was the first time since last November that they had positive reports. So very constructive news out of China. Also, their purchasing managers report was up above 50, which is bullish. So what we're looking at here is MCHI. This is an ETF that shows you China's market, and we can see this nice gap up today, and this is on top of Friday. They were up significantly on Friday, as well as news came out of potential trade talk, positive news as far as the resolution between US and China on the trade talks. So we can see that the Chinese markets are potentially coming into this nice uptrend. So what I've done is run some screens, and from here we are going to go ahead and drill down and take a look at some of these stocks that are on the US markets, but they are based in China. The first one we can take a look at, and a lot of these names, it will make sense as far as the reason that these stocks, there are 125 ADRs, but not all of them are participating. This first stock we are looking at is JOBS. And as we can see, the stock is gapping up here quite a bit. And this is an employment stock. And what I did actually, as far as a employment agency, if you will, stock. And what I did want to go ahead and point out to you here is the stock is, it's a staffing stock. It has broken up above that key 200-day simple moving average. I talked about the significance of that as far as the stock now having more freedom, if you will, to advance. And then also we have this shorter term 10-day crossing up above that 200-day with that golden cross. RSI is positive, as well as this MACD down below. And then there is another stock, certainly there are any number that we can take a look at, but this is a stock, again, very familiar with this particular company. We can see this big gap up. It was actually up over 13% on Friday. And for those of you that follow the markets closely, you may think that this particular stock, you missed the move, but take a look at that volume. That's telling you that institutions want in on this particular stock. It's also a sign that the stock very well may advance further. So when you see these stocks that gap up and have these huge significant moves, your RSI is positive, your MACD had that positive crossover, it's up above this net neutral zero. Many of you may wonder, should you stay with the stock, or could you potentially enter the stock? What I'm going to go ahead and do from here is point us toward an intraday chart of this big gap up on Friday. And what I did want to point out here is I have different moving average. This is a 60-minute, so each one of these bars is 1 hour. And I have a 5 and a 13, so that's 5 hours with this green line and 13 hours with the red. These are very standard for your 1 hour price charts. Same other technical overlays. And what I did want to point out to you is the stock opened down about 4.5% today, but as we can see, it is actually reversing that downtrend. So what we can even do from here is drill down even further. For those of you that are more active traders, I'm going to very quickly pull up a 5-minute chart, and this is going to take us into the open today, and then you can see that we are reversing that downtrend that we saw on the open, and you will want to continue to pay attention to that RSI as it trends above that net neutral. Let's go ahead and drill down here. We can see that the MACD, you don't necessarily need it to cross above that 0 on the intraday charts. This crossover is going to be effective enough. So let's go ahead back and take a look at some other ADRs within the Chinese market that are looking interesting. And I think you'll see a theme here as far as the characteristics. This is JKS. Not quite as dynamic looking, and I'll tell you why. This is a solar energy. Analysts are revising estimates up for this stock, but take a look at this volatility. We can see where the stock hits a new high in price, pulls back, another new high in price, pulls back. Now that's not going to be as compelling to me. I like to see a more orderly stock. So let's go ahead and move on and take a look at another ADR. This is HT. And this is a leisure lodging, a hotel company. And we can see that this particular stock, as it has broken up above these key simple moving averages, it's finding support at an upward trending 10-day simple moving average. Now, quite clearly, we can see with this 5% gap up today, this was a list that I put together on Friday, but we can see this gap up here that the stock is what's called overbought. It's up above this 70. So it's a bit extended. I would look for a bit of a pullback, but we can see down below here that your MACD had that positive crossover. It's up here in positive territory, and the stock is looking quite constructive as far as being in an uptrend. We can take a look at just a couple more names because I do want to go ahead and scoot over to the financials. Now, this is Chinese Eastern Airlines. This particular stock, when you see this type of, we're looking at a daily price chart and it has these gaps up similar to this, it's telling you that it's a very low volume stock. And sure enough, the volume down here is quite thin. So this would not be a potential candidate. But let's take a look at a residential home builder. XIN is the ticker symbol. And we can see that this is in a much orderly fashion, reversing this recent downtrend. Stocks coming up above the simple moving average. RSI is positive. And then the stock is poised to break out of a actually, this is a 6-week base. And what I also wanted to point out about this stock, it yields 8%. So in addition to a technically attractive chart, we are getting a very nice yield. Now let's go ahead, and what I wanted to show you from the initial interface page here on StockCharts.com, for those of you that may not be familiar, there is the ability to get an interactive yield curve, dynamic. And the reason this is important is because recently interest rates have really been dropping quite a bit, and it has everything to do with the Federal Reserve. And in fact, I'm noticing this is not updated, but we can go ahead and back to this. But what I did want to point out to you is the fact that the inverted yield curve has righted itself. And we can, from here, take a look at some of these potential turnaround candidates because financial stocks really did get hit. So what I'm going to take you to here is the industry intraday page. And so we are going to go ahead and drill down. This is in alphabetical order, and take a look at some of these financial sub-industry groupings. And so what I do want to do from here is go ahead and take a look at some of these bank stocks. So let's go ahead back to the sector summary because that's going to get us into these bank stocks. And very quickly, what I'm going to do from here is show you how you can get in front of some of these stocks that are potentially turning. We are going to go ahead and sort it by market cap. And as we drill down here, we can see I want to key in on some of these larger bank stocks. So as we come down here, certainly Bank of America, take a look at that low scooter rating. And that's all about the recent deterioration that we've seen. I will have to leave it at that. For those of you trading actively, happy trading.